Hello, I'm Steven the Calculator Guy, and today we're going to talk about a Matic staked Matic yield that is currently getting about 50% APY and how to neutralize it. So I am excited about the state of DeFi. There are Lido incentives, there are Stater incentives, there are OP incentives. It really feels like summer of DeFi all over again, where yields are super high, but this time we're not in a crazy bull market, and this time I know how to neutralize my delta. So it's a completely different game. Strategists are very excited right now, and if you want to talk strategy, please come hang out in the DeFi Dojo Discord. We are overwhelmed with the amount of opportunities right now. I recently had to close some positions just because I wanted to open a bunch of other positions, and it has just been fun. And you know, DeFi has been cool for throughout the entirety of being in it, but it has recently become fun again with all of the opportunities. So I've been excited, and hopefully you guys can get excited too. Before I go any further, what I want to say is that I don't want you guys to watch these videos and think, oh, let me go open up this strategy right now and copy trade. What I want you guys to get from this is, oh, that's the kind of ways that he's discovering opportunities. How can I apply this to the future? Like, this yield is probably not going to last forever. In fact, most people I know have been farming it for a couple weeks, you know, when it opened up at like 100, 150, 200%, and now it's at 50%. So, like, don't think these yields are going to last forever. Don't think this is the end all be all, but understand how these yields work and how these strategies work so that you can go out and find them in the wild. I want you to become a more nuanced and intelligent and knowledgeable investor and have as many tools in your belt as possible to gain yield. That's my whole goal. Education, not me just telling you where to invest. So let's get into it. What is STMatic? STMatic is Lido staked Matic. Now, you're probably getting pretty familiar with these ST assets by now, watching a few of my videos. Hopefully you are. There are S assets, there are ST assets, there are a bunch of different types of assets that all are just liquid staked asset. What that means is they're getting a yield from validation. Lido is getting the yield from validation, and they're giving you a liquid staked version of that you can trade while also getting that interest. So if you click on stake on polygon.lido.fi, you can see this 8.67% intrinsic interest, which is really cool. So you're already getting 9% just by having that staked Matic. Now, of course, in the LP, you only have half staked Matic, so you're really only getting about 4.3%, but that's cool. So you're starting off with 4.3%. That's a good place to start off. Also, you can unstake, which means you can claim this, which means there's a very low chance of depegging, unlike with staked ETH. When you can claim it, also only a 3-day claim period, awesome. When you can claim something, people can arb it, which means you can unstake it and get your Matic plus yield back in 3 to 4 days. So if it depegs, people will start claiming to arb that opportunity. That's a very good thing for the peg. All right, one thing I want to mention is that when you open up these positions, when you buy the Matic, if you want to delta hedge, if you want to be delta neutral, you need to hedge your delta at the same time you buy your Matic. That's crucial. If you don't do that, you could end up long or short than you want to be, or you could end up realizing loss or gains that you didn't intend to realize. And in my opinion, if you're going to strategize, you need to stick to a strategy very strictly. So where would you open up this Matic hedge? Well, I was looking at funding rates, and you know, I love this calculator. As an example, here's ETH funding rates. I would hedge using MEXC in this case. Let's look at Matic funding rates. In this case, I would also use MEXC. KuCoin, you would have to pay 7%, which is going to eat into your yield. With MEXC, you would get paid, virtually nothing. You'd get paid 0.7% to hedge there. So when you open your position, you want to be on MEXC Global. You want to go over to USDTM. Let me show you from the very beginning. You click on futures, then USDTM. And then once you're in there, click on Matic. And then let's say you want to hedge 100 Matic. So you type in 100 Matic. Maybe you want to use the last price. You want to use whatever price you bought it at, ideally. You probably don't want to use 20x leverage. That would be a terrible hedge. So, maybe you use 2. That's sort of what I use, 2x hedge. I can manage that pretty easily. So confirm, 100 Matic, 2x hedge, and that's where you want to set your order. I like to use limit orders, not market orders. That's just me. And I like to set them at the same place I bought. Now, sometimes I get a little bit scared because it's not filling very quickly and I end up market buying, but ideally you give it a few minutes and you try to hedge at the exact same price that you bought your Matic. So you longed your Matic, you've shorted your Matic. So that's great. Now that you have your Matic, you go over to Lido, you stake half of your Matic with Lido. So now you have half Matic, half staked Matic. You bring that over to Dystopia. On Dystopia, you create your LP by clicking on liquidity, clicking add liquidity, making sure it's Matic staked Matic, not Matic wrapped Matic. Boop, boop, boo. I'm just going to type it in. Matic staked Matic. And you would max your Matic and staked Matic. You want to click stable. You do not want to use volatile. If that one on Penrose gets 0% APR, I don't think you want 0% APR. You probably want the 50% APY, 40% APR. By the way, 50% APY plus 4% that you're getting from Lido. So more like 54%, which is awesome. So anyways, I would also reduce the slippage. 2% is pretty high. I would use 1% or maybe 0.5% and then see if that works. After that, at that point, you want to click add liquidity. Once you have that LP, you know what to do. You take it over to Penrose. If you don't search for anything, you're going to get all these opportunities, and this is not the one you want. You do not want to stake in volatile. You want to stake in the stable. So you click on that, and you just deposit, right? Max, approve, deposit, and stake, and that's it. Once you've deposited and staked, you are earning your yield. Congratulations, you. We can talk about how much yield that's projected to be, but then you want to claim and compound, once a week is fine. Honestly, you're going to be getting, I believe, Lido rewards, Penrose rewards, Dist rewards. You're going to be getting like a basket of rewards that affect, or it might just be Dist, but you want to be compounding that. You want to be selling those rewards and compounding those back into the strategy, or just taking profit. You can also just convert that to USDC and take your profits. Really, totally up to you. I will say in a bear market, it is best to take your profits and not compound. Studies have shown. So let's talk about the metrics, right? What is your yield now that you've hedged? So let's just, I'll just play over here with some numbers. So let's say you put $1,000 and you're getting 0.5% APY. So each year, if we're just going to annualize this, you're getting $500. Now, on your short, which is $500, right, because you're using 2x leverage, if you're me, you're getting 2 times 0.7, so 1.4%, really nothing. And what is that? Yep. So you're getting $7 per year. Woo, good for you. And if you add those two together, you're getting 507. Now 507 on your initial capital, which is 1,500. So 507 out of 1,500, you guys can probably do the math there, but boom, divided by boom, equals, as a percent, 33.8%. So that's your starting APY, is 33.8%, delta neutral, pretty good. And if you're already on the Matic chain, why not? There are a bunch of different Matic, stake Matic yields. You can go on Beefy and look at them. This one is the best that I can think of at the moment. There are tons of good yields out there, some better than others, but let's type in Matic. Let's clear all. Stake Matic. Okay, so 24% here, right? 24%, and then if you hedge that, it's going to be much lower, right? So let's say we were doing this curve one, which I am actually doing, by the way. I'm just haven't pulled this out to go to this one. You can see what my yield is over here. Not quite as good as this opportunity, but it's, something. 0.25%. I'm getting roughly 17% on mine. So not bad, but it's just another staked Matic opportunity. All right. So hopefully you guys have some ideas. Again, if you want more ideas, if you want to talk strategy with all the strategists of the DeFi Dojo, some of whom are absolutely brilliant, we are having a blast with all the incentives coming out. You can join using the Launch Pass right here. You get a whole bunch of stuff. You get support, you get ideas, you get I mean, look at the cool stuff that's going on. You get a stream of all of my thoughts and sort of the condensed versions of what's going on in the world of DeFi and some yields. You get videos somewhere, premium videos that I'm posting about strategies and stuff. You get premium strategy Word documents that explain how to invest in these things. So many resources, an explanation of all the different channels. I don't know. It's a cool place. Come join, hang out with us. If you want to do the free portion, we hang out there too. Just, we can't commit as much time to the free portion as we do to the paid portion. So that's it. Thank you guys so much for watching, and have a wonderful rest of your day.